Stop making the game so hard. Stop overthinking. Just be disciplined. Look for good charts. Look for the little subtleties the charts are telling you. Don't listen to what your neighbor is saying or this and that. It's okay if your neighbor gives you a tip and you go look at the chart, you go, are you kidding me? Or if you take a look and you go, oh, he's onto something. But really, at the end of the day, I always come back to that one word, discipline. If you're really disciplined and you try to keep your emotions in tow, I think the game becomes a whole lot easier and more profitable. So that's the best we can do. It came right on schedule. You can see when we spoke, the market had already broken its long-term moving average, had a failing rally. You got it right back up to the MA, and then all heck broke loose as it got hit hard. This is another thing that's important. As you get later in a move, it starts to become increasingly selective. When we initially came off of that early April bottom, well, you should never do this. You could have literally thrown a dart and almost everything worked because the market was so oversold. But now it's kind of like an aging athlete. Now he doesn't have the same sprint. So we have to be more disciplined and selective than ever as you get further into the move. It's also telling us something that most days the new highs, even on the New York Exchange, are more like 80 or so, or 80 plus. In a really healthy bull market, we should be seeing 250, 300 new highs. You're definitely getting later in the game, but hey, we're all good enough. We can play it. We won't be the last ones on the dance floor, but we do have to know it's getting later in the game. Even in this kind of volatility, you can still do very well. It's just a matter of don't overthink things. Always make a good probability bet. And don't worry about being wrong. We're going to be wrong sometimes. That's life. Just go with the odds.
All right, welcome everybody back to the TraderLion Conference. It's my honor to introduce the next presenter, Stan Weinstein. He needs no introduction, but I'll give one anyway. He's the author of Secrets for Profiting in Bull and Bear Markets, which is a foundational text for many of us. I'm sure many of you guys have read it. If you haven't yet, definitely pick it up. He's also the founder of Global Trend Alert, which we'll talk about at the end, where you can hear Stan's updated thoughts every single day and week. So Stan, first of all, thank you so much for being here. Looking forward to this. Awesome.
My pleasure, Rich. We work well together. We've done this before. Let's do the best again.
Yeah, sure thing. I want to start with the current market. Here's a label on the chart for those of you. We did a podcast back in March. We talked about the correction, the signs during this period right here, the choppiness that broke down here. We didn't know the next leg down was coming, but I'd love to hear your thoughts about how the correction unfolded and how you saw things during the recovery. And of course, now we're in a strong trend. Things have flipped, but it's still, split, 60-40 maybe. I'd love to hear your perspective. So start us with this correction, this next leg down.
Right, well, it came right on schedule. You can see when we spoke, the market had already broken its long-term moving average, had a failing rally. You got it right back up to the MA, and then all heck broke loose as it got hit hard. But then we really smashed, even more than you see in the averages. Stocks got decimated into that early October oversold low. And at that point, where I really thought we are going to probably see a double bottom, it was so oversold they had a quick V bottom, and that's when we turned not long-term bullish, but intermediate-term bullish on that day. I remember it was in early April, and you had that sharp down, and it closed up on the day. They really shook the tree good, and that was the start of what we had since then. So great, you're in a good intermediate-term uptrend. But this is a terrific time that we're doing this review now, because this is not a normal A to Z monolithic bull market. It's like you alluded to, because you know your stuff. I call it a 60-40 bull market. And if you're in gear with us, with the 60% that are in stages 1 and 2, it's very rewarding. But at the same time, if you're holding in what I call inferior merchandise, in the stages 3 rolling on top, the stages 4, which you're getting hit, you're not happy and you're not living the bull market dream. So it's a very challenging market, but it makes our technical approach more important than ever.
Absolutely. And to go a little bit more in detail into this break, you mentioned in this podcast how if we broke this low quickly, it could be a lot more rapid, the fall, which ended up happening. Could you talk us through, in terms of stage analysis, did we break into a stage 4 here? And when did that kind of transition back into a stage 1, stage 2? Walk us through from stage analysis perspective, what kind of happened there.
Right. Well, this market is moving so quickly, it waits for no man, no woman, and no stage. So
Yep.
yes, for sure, you were in stage 4, but here's where I think our approach is so helpful, because instead of getting stuck on trend ratings, whatever, when you have, like we had, I'm trying to remember, I think it may have been April 2nd, but it could be off a day or two, when you had that reversal day, it was so sharp, you didn't know at that point, oh, you were going to have this long-lasting rally, but on that day, I did have clients start to cover shorts and start to put a toe in the water on the long side, because you knew a good reversal was occurring. And then as you went by, you saw after that sharp up, the next down didn't even come close to that prior bottom. And the number of stocks at that point hitting new 52-week lows was so far below the extreme that you had. So it was clear that, okay, now short term was migrating into an intermediate term advance. It became even a longer term stage 2, when you then gapped above, you can show them there, the 200-day moving average, boom. And since then, it's been utopia. But again, it's only utopia if you're in the right stocks. I can't tell you how many even supposedly sophisticated market players are holding what I consider to be inferior merchandise, and it's very frustrating because this is far from a monolithic advance.
Yeah, excellent. I want to get to you've got a list of buys and sells that we'll get into. Any last thoughts about the general market? Or actually, I want to bring up maybe a few names as well as that we covered last time.
Sure.
We've got NVIDIA. We talked about this when it was, it was pretty close to breaking to stage 4. Obviously, the stage 4 didn't last too long. Could you interpret the price action for us here, where it bottomed with the market and now is actually breaking out into new all-time highs?
Oh, yeah, absolutely. Show them. And this is the beauty of the system. Fundamentalists don't understand. Say, oh, look, the chart was wrong. Not at all. You can only deal as best you can deal as the cards come out of the deck. It's a probability game. So you take a look and show them, Rich, it broke down and it got clobbered. But then, look, you actually had a classic little reverse head and shoulder bottom. Although it looks a bit like the Hunchback of Notre Dame there, you can show them there. And that told us, okay, you want to cover your short. We had been short at that time. You want to cover your short, fine. And then when you show them that upside gap, when it moved above, right there, above which moving average is that?
So this is the 50, everybody. This is the 200-day moving average. Yeah.
Right. So when it not only moved above the 50, but look, each card that came out of the deck was textbook perfect. First, you caught that double bottom. Boom. Then you not only moved above the 50-day, but look how you gapped above it. Then look, after you gapped, when it tried to come in the next 1, 2, 3 days, looked like it was magic. Each time they sold it off, it held perfectly at the 50-day moving average. And after that, it was bombs away in the upside. And then, the good intermediate turned into a long term, show them again the upside gap. Gaps are important. And note, you have starting after that short term double bottom, which had a gap. Then you had a second gap at the 50-day. Now you have this third gap here at the 200-day MA. That's a sign of just how powerful the move is going to be, because gaps are very meaningful. And if they don't get covered, which you see, each of these gaps were not covered. It didn't come in and go in there. As long as it doesn't do that, that's perfect. And you had a textbook example.
Yeah, excellent. And I'm glad you pointed out the gaps, because it's amazing how many there are in this trend. And as you've mentioned before, gaps equals tiger in the tank, especially if they don't get filled. Any thoughts on the current trend? Obviously, if you own it, it's in trend. Maybe there's nothing much to do. What would be the first sign of worry for somebody? Maybe more of a trader perspective to trim some. Yeah, please.
That's why I love working with you. You're 2 steps ahead of me. Take a look. First of all, separate the short term from the long term. The long term is a thing of beauty, a joy to behold. The short term now, you have a little potential double top forming, and show them that little bottom 1, 2, 3, 4 days ago, right there, right. Let's catch exactly what that low was.
So that's 164.58.
So let's go on. I like round numbers, under 164. So to me, it's very simple. I'm not telling people if it breaks down, blow the position, but for sure, if you care at all about trading, and even if you're a long-term investor, in this market that's so incredibly volatile, even investors have learned that profit taking is not a dirty word, and with these sharp moves, it's good to take some chips off the table. So if you double top here, you can't go close at a new high, and then you close below 164. Never a guarantee, but I know what I'll be doing. It's just like I always come back to the blackjack analogy. I don't worry in that particular hand. If you've got 11, the dealer's got 6, you're going to double down if that hand is wrong. But if you always do it, you're going to be right the great percentage of the time. And it's the same thing here. If you do a short-term double top and a little hint, show them, Rich, that this was the first gap right off to the left of that little bottom here. Yeah, this is the first gap that was filled the whole way up. So again, if it closes cleanly at a new high and it starts running, God bless. But again, as long as people understand, I'm not talking long term here, but I am talking as a disciplined trader. If you double top, you can't break out, you close below 164, take some off.
Yeah, those are great subtle signs there. Any thoughts on the semiconductors as a group itself, because they've been very strong the last few months, but anything you've been noticing personally about
that's been one of our top 2 or 3 groups. The semis have been fabulous, and even now some of the semis are extended and some are terrible, like Intel blew up today, but there's still some good looking semis. But in general, I would say that the group is a long-term hold, short-term, except for a few like AVGO looks like it could break out again here. Except for a few, I think it's a good hold, but I would look to do new buying in some of the stocks that we'll talk about tonight that look like when we put out the semis a couple of months ago.
Excellent. Well, let's go ahead over to those names, and I'll run you through the tickers here. So first of all, we've got AD&T. So we've got a longer-term downtrend, but recently looks like a changing character. How are you interpreting this chart, Stan?
Right. Okay. Show them again. You had sort of a reverse head and shoulder. That's one, off of the bottom. Then you moved above, and that formed the stage 1 in there. Then you moved above the long-term moving average and moved into stage 2. And after the run-up, it tried to correct it. It didn't come back close to the 200-day MA, which is very encouraging. And now it's going to another consolidation. So at this point, it's a strong hold. But if it were to break out again, show them like there's a straight line above the recent highs. If it closes cleanly above that, I think it's going to run again. If not, and this is the beauty of the system, while it's long-term bullish, if it doesn't break out and show them that little low about 5-6 days ago, if it breaks below, go a little to the left, that's it, you nailed it. If it breaks below that low, hey, take a few chips off, it'll come back then to the 50-day MA. So really, as wild as this tape has been, and I've been playing this game for a lot of decades, this truly is a fast-moving, quickly rotational wild tape. But if you have the proper discipline and you really set the game in its proper perspective, even in this kind of volatility, you can still do very well. It's just a matter of don't overthink things, always make a good probability bet, and don't worry about being wrong. We're going to be wrong sometimes. That's life. Just go with the odds.
Excellent. And say we had an inside bar tomorrow, and then we try to break out through this line of resistance. Would your stop be at this prior low, or would you move it to maybe this prior swing low? Swing low here, a little bit higher.
It depends who I'm talking to. If I'm talking to a day trader, a 2 or 3 day trader, yes, I'd press it. If I'm talking to somebody who's looking for the next 2 weeks, I would go, it's not that far away, I would go at that main point. But again, each person, I say this over and over again, should buy and sell to the sleeping level. So if somebody is a very nervous trader, do half and half. Half under the first one that you showed and half under the second one, and that's it. And the more mechanical and disciplined, well, you know this already, Rich, that you can become, the more successful you'll be, because you have to know our head is often our worst enemy as we start to overthink things.
Excellent. And we've got the next one, AGIO here. And by the way, for everybody, the industry is right here as we bring up these stocks. So this will show the industry as well. So this is biotech, AGIO, Stan.
Good. And there's so many bios now on the wrong side, the long side of 3s and 4s that aren't working. They're almost everywhere. It's not specific groups, although like a lot of insurance stocks are very negative. But on the buy side, it's interesting. It's a lot of my small to medium biotechs. I've had so many, it's unbelievable. It's aerospace. That's been another real good group. I also see casino stocks coming on here. It's also been solar. They've been very good, although short term they're going through a little correction now. It was my gold stocks. But to show you just how divergent this tape is, I don't know if you can show them 2 charts. See if you can show them the chart, Rich, for RGLD gold.
Yep. Here we go.
This is why I'm telling you the system, I think, is so important. Gold has been acting well. Look at RGLD. It's had downside. It rolled over, made a stage C top. It had a downside gap. It looks terrible. And you don't want to be in it no matter what you think of the group. Now let's show them Newmont, Nancy Eddie Mary.
Yep, there you go.
Now look at that. That's breakout. You would think that it's a totally different group. So this is why it's one thing to talk about, yeah, we're in a bull market, but then there are good groups and bad groups. Now you not only have to separate the groups, but this tape is so crazy, even within the groups, you have good and bad happening. So the discipline is so very important.
Yeah, excellent. Anything else you want to mention about AGIO? We've got bottoming action stage 1 here.
It's a good strong hold, and if it would go topside and close above that high of 3 days ago, I think it's going to run again.
Excellent. All right, next up we've got BWXT breaking out of a nice short-term consolidation today. Looks good.
I just sent this to you tonight. I felt it was very timely. When we went through the charts tonight, it was like, oh, it's first happening today, which some of the others are a few days away already. So this looks real good. And working it from here back to your horizontal line there, I think it's a good risk reward. I like it. And again, also show them how when it had that breakaway gap by the 200-day moving average, it didn't come close to trying to even cover it. Then you have that second gap right there. It didn't cover that also. This has its tiger in the tank.
Yeah, and this is one of those aerospace names you were mentioning. That's been a strong area.
Very good group. And that's another thing. I wrote it in my book years ago, and people say, Stan, you wrote that book back in 1987. Is it still valid? Yes, they've obviously sped the game up, no argument. But supply and demand will always be supply and demand. And psychologically, fear and greed will always be fear and greed. So it's still the same thing, but the game is going so much faster. So as I wrote back in my book then, I said, it's what I call my forest of the trees approach. First, you want the market forest to be bullish. Then you want the group to be bullish. Then you get the trees in the group. But here you see that the groups, if you have 2 equally strong charts, but let's say one was in insurance, which is a bad group, but it could have a good looking chart. And the other ones, let's say in aerospace, which has been dynamite for us, or biotech. Go with the good group. Each thing is an incremental thought on your part to get a little closer to perfection, although we never achieve perfection.
For sure. All right. All right. Next up, we've got CDNS. This is a software name breaking out of this base here. I'll draw the line across. How would you analyze this one, Stan?
Again, look at it. It was perfect. First, it did that hunchback of Notre Dame, head and shoulder, little bottom back there. Then it did the gap. Then it moved above its 200-day AMA. But this one was interesting. This one was weaker, which tells you something. So that's why it's so important to take a few chips off the table when you screw up there. You know, when you made that little breakdown after that little double top, you know that? Then, yeah, right. Then it came down, it held the 200-day MA on a closing basis. Then look, it came down, it held the 50-day MA, and now it's starting to get its oats again. And I think that it looks like it's getting ready to go. And if you'll note that the volume in the latest session was also positive, that's always another little positive hint.
Yeah, and I think that was a big takeaway from talking to you recently is obviously overall more stage one setting up here, but it's starting to respect the moving averages. It broke through them and now is respecting them and holding at the 250 and then here at the 50. And I think that's one of the key things to look out for when a stock is potentially ready to start a stage two uptrend and get really into the momentum move is when it starts respecting the moving average. And then obviously it set up that nice pivot today. And I really like yesterday, a really tight day on not no volume, but a very tight day overall, a lot of contraction and then nice expansion today on the breakout, as you pointed out, on big volume.
Rich, I told you that's why I love working with you. You know your stuff. So you're teaching along with me. That's
Yep.
all valid. That's what people have to get. I don't want to be a wise guy and say, oh, the game is easy, because it's not. But it's not as difficult as so many people make it. You don't have to spend hours wasting your time reading the Wall Street Journal, which, forget it, I think it's bad on a lot of levels. But in listening to the so-called quote-unquote experts on the CNBC and Fox News Channel and all that, Fox Business Channel, the bottom line is, if you just go and lock yourself in the room and quietly look at the charts, they'll talk to you. Not only the individual stocks, but you also get messages like when you see how many stocks first on that early April day had the key reversal days, then how many when they came in refused to confirm and come back as low. That was a hint. Then how many thereafter started moving above their 200-day moving averages. Each of them become part of the story, the chapters in the book, and if you put it all together, you'll end up at the end of the book being happy.
Yeah, and Dash is a good example because there's a lot of names that ultimately started really nice trends like Dash, let's see, Palantir as well, where they held above the 200-day moving average on this base here, Hood as well, and they found support there or above it, and those were the ones that really started this super strong trend and acted really nicely. So that was a good thing to look out for.
So right, and look how this one never even pulled back close to its 50-day moving average. That's a sign of super strength.
Excellent. And this one, is it a bit extended now? Would you be taking some off on this reversal day?
No, because you just go to 4 days ago. Your trading stop is so tight. Why should we guess? Okay, I think your instincts are right. It's probably 60-40 making a scalping top here. But it'd be one thing if the inflection point were 30 or 40 points lower. But you're so close here, you could turn out to be very sorry. One good day and you're suddenly breaking out to a new high, and then you're going to kick yourself. Why'd I do that? So even if it goes against us, I like to do things for a reason. That would be a reason.
Excellent. And I wanted to go to a weekly really quick on this one. This is a great chart to look at. We obviously had a big disappointment after the IPO, formed a long stage one base here, Anything of note on the weekly in terms of stage analysis? Here's the stage 2A breakout, and it's been in a strong stage 2 uptrend ever since. Anything else you want to add here, Stan, on this weekly of Hood?
No, just what you had said. I used to say when I was on the seminar circuit many a day ago, the bigger the top, the bigger the drop, the bigger the base, the better the move. This had a beautiful base. It was like a foundation under your house, and it's not surprising that it's been a big winner. And the other little subtlety, show them how the 2 times that it had that temporary break on the way up of the 200-day moving average, each time, number one, the moving average was rising, so you got to give it a little more credence. And number two, both times it did not close below the 200-day MA. They shook the tree, they scared the people, and in case one, and then go up higher in case two, in both of them, they closed near the high of the day. That was, again, there were all these subtleties. So many people just look at a chart and say, oh, it's a good chart, it's a bad chart. If you really learn to listen, I don't mean to sound mystical, but it really, the market and the charts are talking to you. And if you're just open-minded and you hear the little things that it's whispering in your ear, there are a lot of little subtleties along the way.
Yeah, it's basically the opposite of a key reversal bar to the downside, where it's showing significant support at the low of that base. And then would you be watching basically for the next entry, the move through a moving average, line of resistance? Is that what you'd be waiting for?
Well, there are so many things, but yes.
Yeah.
Also, after the first time we made the false breakdown, you've had that little reverse bottom forming, like a little reverse head and shoulder. And then when you broke out above the horizontal line there, you had a hell of a trade.
Yep, excellent. All right, let me jump back to the buys here. And here is Dash on a daily. This is the recent base during the correction. Now in a strong trend, pushing through these highs today. Anything you want to add on this one, Stan?
No, it's just a good-looking chart. And this is another thing that's important. As you get later in a move, it starts to become increasingly selective. When we initially came off of that early April bottom, well, you should never do this. You could have literally thrown a dart and almost everything worked because the market was so oversold. But now it's kind of like an aging athlete. Now he doesn't have the same sprint in his move or whatever, and you see that not as many stocks are showing as good action as this Dash is. So we have to be more disciplined and selective than ever as you get further into the move. And I think this is a good short-term and long-term look.
Excellent. All right, next up we've got EW Edwards Life Sciences. We've got a big move up today on volume, but a close off highs kind of in the middle. How would you kind of analyze this one, Stan?
Well, first of all, I'm glad that it didn't close at the high. It wouldn't be buyable. I think that it got a little ahead of itself, and now it shouldn't come back to today's low. That would bother me. But I think it's going to flag in the next day or two a bit. And again, you can do some long-term buying. I would put a stop under Thursday's low, just 2 days. You're limiting your risk, and the upside, could be quite interesting because number one, look at the dynamic action. Number two, look at the volume, which is the highest it's been in a heck of a long time. So volume, price action, and the group is good. I think that it has a good risk reward.
Yeah, a nice stage 1 base coming here and first popping through the moving averages, so excellent. We've got GTX next.
Right, and this has been another winner for us. Initially, it broke out from that little reverse head and shoulder bottom when it was first recommended. Then it had that nice run up. Then when you had the downside gap there, traders should have reduced. It came in even sharper than I expected, but it turned around. Again, you made that little breakout of the horizontal area right near that right there, and you're running nicely. And I think it's a good long-term hold. I think that it's acting very well. There are so many of these. If you just stay with the charts that are acting well, there are so many that are still being so positive. It's just when we'll show them later that it isn't all roses here, that there was definitely some thorns, but right now it's a good looking chart.
Yep, and I think people will be interested in what you have to say about the Tesla chart that you put in the sell category. So we'll see about that. Next up, we've got Generac, which again, super strong bar up on this day and breaking above the 50-day moving average, supported at the 50 after it gapped up above it, and now is above the 200-day moving average and poking its head above this mini consolidation here. I'll draw in the line. Anything else you want to add here, Stan, on this one?
I think you've summed it up perfectly, and this is why I sent you what I felt were timely stocks, because some of them that early in the week when we spoke, they've already shot to the moon. Others, a few of them have fouled up. But here, these are timely patterns, and not only do I want people to look at this and say, oh, I'm going to buy this stock or that stock, but I'm trying, as I've used this analogy so many times before, I'm trying to hit tennis balls. So they're practicing their forehand and their backhand, and they're seeing themselves, what you and I see in the charts, and they see, because so many people, it amazes me, without naming names, even so-called chart reading experts that I'll often see on TV will be saying something that gives me the shudders when I see them looking at a chart and saying, oh, here's a good looking chart. And I'm saying, that's not a good looking chart to me. I want to train everybody's eye so they really see what a Picasso is, and they focus on these good looking charts. And then if one or two don't work out, but let's be honest, nothing in life is going to be perfect. But I think if we follow the good discipline, I think we can be right 8 out of 10 times, and the 20% we're wrong, that's just the price of business.
Exactly. All right, next up we've got INSW, which is setting up a spot right here. Again, longer term downtrend transitioning. You've got the inverse head and shoulders here, and setting up this spot. Is that the pivot that you're looking at, Stan? This line here.
You've nailed it perfectly, Rich. And the other thing, I purposely put this in here because this is a hated group. Okay, it's not one of my hot groups. It's oil. It's a hated group, but I think when you start to see stocks in a group like this, which people have hated, start to shape up, it could be an early indication. So if it breaks out, I think it's worth adding to the portfolio as a hedge, and they may be getting around to this because at some point you can only take, at least on a trading basis, Google so far, and the alphabet so far, and they'll want to be looking for new merchandise. So I think if this breaks out, well, certainly not a day trade, this could be a very interesting thing. And it showed them not only the short-term little head and shoulder, look at the whole chart, Rich. You've actually got a giant reverse head and shoulder bottom. Show them that.
Yep. And you've got a little subtle gap right here 2 days ago, 3 days ago. Yep.
Right. I think that's, and I'll be honest, I didn't see it the first time. It looked interesting to me, but now that I study it on this blown up chart here, I first see the long-term potential head and shoulder bottom, and again, the bigger the base.
Yep, and I'll show the weekly just to show that a little bit more clearly.
Right there. So clearly, Rich.
Yep, excellent. All right, next up we've got Lunar. Here's the weekly, but let's go to the daily here. Let's see. Are you watching this pivot right here?
Yeah, absolutely. If it now can close above Thursday's high, I think we could have a little run there. And I like that it held at, I guess that's probably the 200.
Yep.
Yeah, it held at the 200 and it respected it. And now if it closes above, I think it'll run right into, on the left side there, you'll see where it had that breakdown right at the 50-day moving average all the way to the left. I think it'll run back to that resistance rather quickly.
Yeah, interesting how it's holding the 50 here. Look at that, and you've got demand bars, upside reversals off that level. That's interesting.
Look how many times it did that.
Yep, exactly.
The subtleties that we want to pay attention to.
Yep. All right. Next up, we've got JBI, Janus International Group.
It's getting ready. You take a look, the 200-day moving average hasn't even quite, leveled out yet. So it's still a little early, but I think that this is going to be turning in the weeks ahead. So you can do initial buying when you go above that high of probably 2 weeks ago. And then when you see, it'll probably come back a little test. and you'll see the 200-day MA maybe 2 weeks from now start to turn slope up. That'll tell us that it's on its way. So this is still early in the game, what I call a stage 1B, late in the stage 1Bs.
For a stage 1B to really look ready for a stage 2 uptrend, do you want the 200-day moving average to be uptrending ideally? This one is a pretty sharp transition from a downtrend to an uptrend, but are you looking for that moving average to start sloping up to really get interested?
Yes.
Yep. Awesome. All right, next up we've got KMT, Ken Metal, and we popped above the 200-day moving average nicely. Looks like it's trending here. Any additional thoughts here, Stan?
And look at how it respected it to the silly millimeter. After that breakout, it held exactly there. And then the next couple of times it even comes close. So it's obviously not a quick trading stock, but it's another good long-term investment. And this is why I remain, as I have been for quite a while now, moderately bullish on the market. But I keep emphasizing I'm bullish, but understanding it's a split tape. So rather than being 100% A to Z bullish, hey, it's like we said earlier, it's 60% bullish. And if you're in gear, you can still be doing very well.
Excellent. All right, next up we've got MTW. And yeah, look, I'll draw this line right here. How are you looking at this one? It looks like a nice recent pullback to that pivot. What are you watching for now?
It held right at the pivot right, and now if it closes above that little high there, you got it. I think it runs again. And when it came down on the pivot, it didn't even come close to the 50-day moving average. Again, there are so many of them, but I tried to show tonight things that I felt were relatively timely rather than just ego stroking and showing, oh, we had this and the thing has gone to the moon. I want to show things that I think are actionable in the days ahead.
Yeah, and I like after earnings here, it had a powerful move higher. These two bars in a row through the 50, through the 200 there. And yeah, now setting up this beige within the stage 1, getting ready for stage 2.
And look how it came close but failed to cover that gap after breaking above the 200-day MA. Go to the little left, yeah. Look at how it held right above that. It's like magic. And I've said this before, but people who may just be seeing you and I do this for the first time, gaps that aren't covered, probably I would guess something like 80% of most gaps get covered. But gaps that don't get covered lead to powerful moves. So that's another important subtlety.
Excellent. All right, next up we've got MLI, Mueller Industries.
Another good-looking chart. This one's, from when I gave it to you early in the week, has had a bit of a move. So I'd buy this on a pullback, make a little line across the basket above the breakout there. So flagging in toward there, I think that's a good intermediate-term buy. But don't buy it right here because it's had a bit of a move in the last 4 days or so.
And on that pullback, you're looking for a decline in volume overall on the pullback, or does volume not matter too much?
No. Declining volume makes it better for sure. That's a good sign. And this is another thing. We're always in control, Rich. Let's say it comes in much more than we expect, and it doesn't hold at your little line there, but forget about an inch, but it comes well inside. Forget it.
Right.
Move on to the next one. There's always another taxi coming along.
Yep, there's another table to play. Perfect. All right, we've got NTES. This has been trending nicely. What did you want to focus on here?
Okay, I like China. China is undergoing a correction right now, and this has a little correction, downside gap, so let it come in. But especially if it holds at that last gap, look to your left. I'm guessing it was probably about 132, 133. See if you can see what the highs were on those days.
Am I at the right gap here? What, right here? Yeah. So this high is 133.50 flat.
Okay, so let's say 133. If you see it holding near there and it starts to turn up, I think that'll be a good investment point to go in.
On a pullback, are you typically buying as it gets to that level, or as it shows strength and pushes off that level typically?
Pushes off. Okay, I want to see that I'd rather pay a half point more and see that it's not crashing below it.
Excellent. All right, next up we've got Oklo. This is a fast mover here. What are you watching for this name?
This has just been a dynamite stock all the way. It's in a good group, and if we could now go topside above yesterday's high, I think it's a buy again.
Excellent. All right, a lot of tennis balls being thrown at people. We've got Sky W. Nice little consolidation here. I'll draw this line across. Anything else you want to mention here?
No, just that show them how the last 4 days or so the volume is sneaking in. You know, I like that. It hasn't even broken out yet, and you can see buyers sneaking in there. I think that's another subtlety. These are all subtleties that most people don't even look at when they look at the chart.
Excellent. All right, next up we've got SMCI. This has been a very sharp decline recently, but now is more stage one. What are you looking for to potentially transition this into a tradable stage two?
We're already in the stock. It's terrific, but I think that you can even do more buying on Monday if it breaks out above today's high. I think it was about 54 and a half. You close above there. I think trading wise, you'll run to that prior high and long term. Let's take a look at the long term chart. I think long term it could be even more spectacular.
Yeah, here's the weekly.
Right. And it's in a good group. So I think that it's interesting. And I like also how since it broke out above the 200-day MA, you can see it clearly on this chart. Look at how it's respected the whole time, the 50-day moving average.
Yep. Did you guys get involved on this breakout here?
Yes.
Yep. Awesome. All right, let's go to the next one. We've got MODG, Topgolf Callaway, and let me go back to a daily here. This is a nice trend, nice gap as well here, respecting the 200-day moving average, pushing off strongly here, and now in trend. Anything else you want to highlight here, Stan?
Yeah, it needs to close above that high. I think it's like $10 a nickel or something.
Yep.
Close above that, I think it's going to be a repeat buy signal. It's been respecting the 50-day to such a degree it hasn't even come close to it. I think it's another good one, and I see again, while it's not as dynamic volume-wise as the other one we spoke about, you can see a little bit of volume sneaking in even while it's consolidating, which is encouraging.
Excellent. And this one, nice inverse head and shoulders here.
Oh, I'm telling you, that's what so many people missed. There was that reverse head and shoulders taking place in so many stocks when people were worrying about the tariffs, and Trump's tariffs are going to cause a bear market and make stocks go much lower. The market was singing a different song. You can see it in the charts. It was unbelievable. But then again, that's why I say it's good. When I was young and foolish, I used to proselytize and want everybody to be technicians. I've kidded around on the show before, and as I've said, I don't do it anymore. I don't want everybody to be technicians, because then who are we going to sell our bad stocks to?
Exactly. All right, next up we've got TT, Train Technologies. This one has been really nice orderly consolidation here, pull back into it, and then this is the sign of strength here that I think you're looking for off the pullback and acting really nicely the past few days.
Again, and show them 3 days ago that little subtle upside gap.
Yep, right here.
Right there, that didn't come close to covering it. I think it's just a nice, beautiful Picasso.
Excellent. Yeah, I love this gap through the 200-day moving average. Is this something that you would buy here? This gap up here? Or would you wait for?
100%.
Yeah.
Again, as an investor, gotta be honest. As a trader, you think twice because it's a little extended. But if you're playing intermediate term, you're looking 2 months at a time. Not even a question. That's a stage 2A.
Excellent. All right, next up we've got Val here. Again, nice bottoming action, now above the 200-day moving average. Are you watching this high here or Thursday's high for potential add? Yeah.
Above that'll be a repeat buy signal.
Excellent. Anything else you want to mention here? There's a nice transition from downtrend to potential uptrend here, and it actually lines up nicely with this line of resistance. I'll draw that in.
Again, look, you have that subtle reverse head and shoulder bottom in there, and I'm telling you, the market was not talking to us, it was yelling at us. And meanwhile, I can tell you, if you go back and you look at the bull bear figures, how many people were on the wrong side of the game there.
And this is another oil and gas name similar to INSW. So it'll be interesting to see if that group and area develops further.
Right, there's subtleties coming in there, little buying sneaking in.
Excellent. Next up, we've got VRSN.
I think this is fantastic. Just unfortunately, it moved a little too quickly today, but any little pullback, I think this is a great trade and investment. And look at the volume that came in here today. Look at the beautiful parallel area it broke out of. It's great. So I think it'll flag in over 2-3 days. It probably, if I'm right, Rich, doesn't come all the way back to your line, but say it comes back maybe half to 2/3 of today's move. I think this is a beautiful thing to buy.
Excellent. And a question for you actually about how markets have changed. Obviously, we had the rule changes about how information could be disseminated, and now everything comes out on the earnings report. How did you have to adapt your trading and how you traded and entered names based on that change? Did you have to do that at all? Because obviously this move is after they had earnings, it looks like, last night.
No, you're 100% right. It wasn't a matter of having to change tactics. You just have to live with it. It was much easier in the 80s and going into the early 90s when we do know that there was shenanigans going on, and sometimes the accountant spoke to his brother-in-law or whatever. But people are being much more careful now because there's a real downside to inside information. So you do get these sharp moves, and I would say you have to be much quicker. That's the reality. There's no waiting around. You got to be quick. But the other thing that's interesting, back in the 80s when I was writing the professional tape reader, we had a whole string of issues that were takeovers. And, we even had a certain pattern where when you had more than 2 to 3 so much volume and it broke out, whatever, didn't know at the time, but a big percentage of them turned out to be takeovers. Now that's not true at all. There are a lot of times I've seen a negative, semi-negative chart on a Tuesday, and Wednesday they suddenly announce the good news and takeover, and it flips the whole thing. So there really is much less inside information going on, and that's the way it is, and you got to adjust to it.
Just got to live with it. Yep. All right. Last of the bullish charts, we've got GES. We've got GES here, just poking above the 200-day moving average recently. And again, really nice bottoming action over the past few months.
Right. And this is why I purposely had Holly send it to you right before we did this podcast. If you take a look, it's very timely. It's what I call the stage 1B. It's late in the base. Everybody's hated it. Again, it had a reverse head and shoulder bottom. It hasn't done diddly in the bull market, da-da-da-da-da. And talk about everything to me is risk reward. Even if we're wrong, I would only buy it breaking out above that little area so you can get it. I don't remember, it's 13.5 or whatever. What exactly was the high there 3 days ago, Rich?
That was 1372.
Okay, fine. So let's round it up to 1375. Close them up 1375. I think it's a good buy. And from a trading point of view, if then it reversed and went below today's low, I would take a quick loss and say, fine. Conversely, so you're defining your risk, which is small. Conversely, on the upside, let's look at a weekly chart and see where it could go.
There we go.
Gee, look at the upside. We could have, in the next 2 months, a hell of a move with that very small risk. This, to me, is a perfect, on a breakout, risk-reward stock. 1B about to become 2A. So it's great. And the other thing I like, when I mention it to some clients, they hate it because it's got bad fundamentals, it hasn't done anything. So that's good. I think the next part of this market move, you can see in the last 2 weeks or so, a lot of the stuff I put out, I'm not judgmental. To me, I just want to get good stocks and hopefully make people money. But if you really do step back and judge what's going on, there's a lot of stuff that's going that I'm recommending that are not widows and orphan stocks, and that's telling us something. We're getting later in the game. It's becoming more speculative, so you can play the game, but you got to know that it definitely is becoming, not as easy as it was when it was the first or second inning.
Yep, excellent. And a lot looking through the rest of the group, there's a lot of names that they've been in longer term downtrends, but now we're starting to see some potential rallies. Big move on volume here with AEO. They had Catalyst here. How is your view on the overall group as a whole, the apparel retail?
I think you've just done a great job. There were some that are already in stage 2, and there are a lot, like you showed me, that are forming stage 1 bases. And the bottom line is, like, let's look at RL. Look at Robert Larry.
Sorry, give me a sec. There we go. Ralph Lauren.
And that's not waiting for anybody, That's been on our buy list, So I think the group is shaping up, and a lot of stocks, they're worried because brick and mortar is going out of business, this and that. A lot of the stocks are starting to come to the fore, and we're getting later in the movement. It's the old thing, every dog has its day. I think you're going to see a lot of dogs barking here.
Excellent. All right, let's push on to the sell list, and we'll start out here with Bro, and this is a daily chart of Bro. Below the moving averages, rejected at the 50 SMA in that area a few times. Are you watching this low for potential add to a short?
No, I don't want to short it here. I cover short here against that. I think it's starting to make a short-term bottom, but 2 things to accomplish. Number 1, this shows how when you've had a good short and you're in an area and it's starting to hold, you should take some off. And then if it closes cleanly above Friday's high, I'd cover the rest because you're good, Rich. Show them where you think it's going to jam to.
Right here, yep.
Right, up into that area, and it'll be a sale again. That's where it'll be a short again. So it's 2 things. 1, is showing how to handle the stock as a short. 2, it also, I just want to make very clear, they're going to see when we go through these stocks, if you only looked at some of these crummy, and I could have given you another 50, if you look at some of these crummy charts that I pulled out, you would think you're in a bear market, but you're not. You're in a hedge market, and this is why following the system and being in gear is so damn important. Let's go to the next one.
Yep, excellent. All right, we've got CWAN here.
And look, I mean, since this broke this 200-day MA, it's been a horror show. And actually, if this one breaks down below its low, you take a look at the low there, I think this could immediately start another down move. But even if it doesn't, this is a stock you don't want to own. And it's amazing when you look at all the volume and so many of these bad charts, how many people are buying these inferior charts every day. To me, it's crazy.
Yep, excellent. And next up, we've got CRWV, which was pretty good to alongside since its IPO, but now is leaking below its 50. How have you interpreted this one, Stan?
Very easy. We interpreted that we sold it. The bottom line is it yet hasn't developed. It's not trading long enough to have a 200-day MA. But take a look on a short term, trace out for them. You'll see yourself a little short term head and shoulder top. You can shoot a line across there, a horizontal, slightly up sloping line, no, a little lower, make it lower, off of the bottoms, off of the bottoms.
Oh, right here.
No.
Sorry.
Off of the little, off of, yeah, in this area, right, go in there. Yeah, now you're talking.
There we go.
There you go. So you had a little head and shoulder, you broke it, so that's the first sign if you're in the stock, hey, you made a lot of money, don't be a pig, start selling. Then look at it, how if you shot your line a little to the right, the next rally failed right below your line, right at the line, and then you broke down. Now you're breaking the 50-day MA. Again, we have to understand, don't overthink this. It's a probability game. You could sell a stock and suddenly, boom, they come out with good news, but that's a 1 in 10 shot. 9 out of 10, this stock in the weeks ahead is doomed, and I don't want to be long it.
Excellent. All right. Next up, we've got Costco. Here we go, breaking below the 200-day recently.
Another good company, bad chart. It's done its deal, and it also did sort of a slanted head and shoulder top. And it broke the 50-day, and now it broke the 200-day. And this is what people understand. The fundamentals, as it comes down, say, oh, as it gets cheaper, it's a better buy. And I don't see it that way. To me, that's where they make a mistake. Oh, if it was a good buy at 500, it's a better buy at 450. To me, no. You want to buy strength. You want to buy healthy patterns. You don't want to buy something like this, which is first running into stage 3, into 4 trouble.
Where would this transition to the stage 4 for you?
Well, it's already in stage 3 and I'm out, but I guess officially take a look at that spike a little, keep going to your left, that extreme, no, a little to the right now, a little to the right. That's it.
Yep.
Below there it's stage 4, but that's why it can be, fallacious to wait for that to develop. I always say shoot first and ask questions later. Once you made the double top, once you broke the 50-day MA, once you broke the 200, you're gone, So don't wait for official ratings. It stinks. And we've got so many A's, why would we want to be in a D?
Yep, and the key reversal bar down here, the 50 SMA curling down, there's a lot of warning signs to be on guard for.
And that's what it's all about, which we're teaching them tonight, Rich, to look at these subtleties so the game becomes a little less mystical and hopefully more profitable.
Exactly. All right, next up we've got Docu here. Would you like it on a weekly or daily?
Let's do the daily first.
Yep. Here we go. Here's the daily.
Yeah, I like the daily. I think it's failing right now under the 200-day MA. And if it breaks below the low of the last 2-3 days here, I think it's going to start a down move. It'll have been a failure. And you can see, first, look at the big downside gap. Then when it tries to make a recovery, so far, look at how each time it failed near the 200-day moving average. And this is another subtlety. The 200-day moving average hasn't even rolled over and started down yet. That's still in its history ahead. When it starts to round over and start down, I think it's really going to have trouble.
Yeah, and I look at this chart and I just see all this choppiness. There up moves and down. There's no cohesion to it, and that,
right.
To me, that suggests weakness for me when I'm interpreting things.
Totally right.
Yeah. All right. Next up, we've got GoDaddy GDDY.
Another one. Take a look again. ABC. First, you see A, where you had the failing double top back there. Go by, double top. Then a little breakdown, so you did some trimming. Then B, now you started breaking the long-term moving average. C, you came back up on the next rally and failed right there under the 200-day. And again, why would you want to own a stock like this? And meanwhile, there are so many bargain hunters and fundamentalists, and people are thinking, this is a great time to scarf up the stock. To me, it's ridiculous.
And not necessarily for this one, but when you're looking to short a name, are you shorting it at a failure of the moving average where it gets rejected from it, or when it breaks a line of resistance afterwards?
Both. Incremental. I don't like to move all or nothing. So the first thing is good, and you have very low risk, because if you're wrong and it closes above the 200-day MA, you take your small loss. But then when you see you're right, this is where people who are losers, they average down. We average up. When you're right, you start pressing your bet. It's really the same thing in blackjack too when you're on a roll. So the bottom line is, you did it right, and now it starts to foul up more, so you press your bet.
I like that. Press the bet in the direction of the trade as it's going in your favor.
It's going your way.
Exactly. All right, next up we've got GSHD, another insurance name here.
Right, and this is a bad stock and a bad group. And forget that it blew up Thursday, but take a look. See, these things don't just happen. It's not usually have an A+ chart and suddenly it turns into a D. You look at a series of lower peaks, 1, 2, 3, 4 lower peaks. You broke the 200-day. There's no excuse to have been in the stock. You had one more finky rally that failed to even get quite back to the 200-day. It failed then at the 50-day. Somebody knew something, and then boom. Now, I didn't even know, they must have come out with horrid news, and the rest is history.
Yep, and just want to show the weekly here. Yep. You can see the lower peaks here on a weekly as well. 1, 2, 3, 4. All right.
Look, I'm telling you, it's so clean. When people have learned to truly observe, it becomes an eye-opening event because they look at so many things that aren't relevant, and we're looking today at the things that are truly relevant.
Yep, excellent. All right, next up we've got LOPE, and I'll bring it over to a daily chart here. And there we go. Breaking below the 50 here and now below the 200 day.
Right. Now, this is not developed enough that I'd want to short it, but it is something you sure don't want to be in it. Again, we're sharpening their eye. Look at how it was a good stock until you did the double top. Way back, you'll show them that double top. Then you broke down below. You got it if you drew a line there. Then you'll see when you rallied, if you had a line that failed right at that line, then it broke cleanly below the 50-day. Now you're breaking below the 200. It's a sequential game. You can see ABC. And to think that there'll be people on Monday morning buying this, to me, it's asking to lose money.
Excellent. All right, next up we've got ITJR, Integer Holdings Corporation.
It's oversold short term. It's likely to hold here against that prior low from a couple of months ago, which you show them there. It's right above it. But on a rally up, this is a sale. It's not a buy. And I don't even think it'll get up to the 50-day MA. I think it'll be lucky to. I think it's not even going to get to that high of 3 days ago or 4 days ago. No, 3 days ago. I think it's more likely going to run into trouble at that little break of, if you have, go over here, right there, just at that little bottom. I think it's going to run into trouble as it gets there. So you don't want to be in this stock. And again, we're sharpening their eye and we're showing them that this is not a monolithic A to Z bull market. And this is why you need to understand the stages and work with us to be in gear on a stage analysis basis.
And Stan, we're looking primarily at daily charts. We're looking at weekly as well to see both sides. But are you looking more these days, more at dailies versus weeklies? And how does that change over the years, if it has?
Yeah, I'm definitely looking more dailies because things are moving so quickly. And for my day traders, I'm looking at minute by minute trades. But the market is sped up, so I'm looking more at dailies. But then when I'm doing my weekend work, like during the week, we go through a lot of dailies. But then before we put out the in-depth report that we put out every Sunday morning, then we're checking it against weekly charts. So that's where the weeklies come in. But on a nightly by nightly basis, you're looking at the daily action.
Excellent. All right, moving on, we've got ISRG, recent failure at the 200-day moving average after, looks like earnings. Now pulling in here. What are you looking for with this name, ISRG?
I'm looking for an oversold rally, and if anybody is unfortunate, they're holding this, they should sell it up.
Yep, excellent. And just scrolling out here, you can see this here. Recent gap down, rally into that area, can't fill it.
Look how it didn't cover the gap.
Yep, exactly. Perfect. All right, moving on. We've got LB here. Deep below the 200-day moving average. Short-term rally recently. You'd be watching for a rollover?
Right. Perfect. Had it perfectly. They probably came out purposely. They probably came out with news yesterday. I see the volume. But anyway, it doesn't matter. This is an example of if you're short, they should be ready to do reducing. When you're this far below both the 50 and the 200, and you get a sharp break to a new reaction low, and then it moves back above the low of which was Wednesday's low. So you move above Wednesday's low, even though it's a piece of what, you want to start covering your short. And I think there's going to be a good oversold rally here, which will give, if somebody is unfortunate enough to be long, a chance to sell it on strength. And if you're looking to short it again, there's a couple of plays here. You should be out now because I think there's enough is enough. And on a rally, maybe 2-3 weeks from now, failing up near the 200, it'll be a short again.
Yep, excellent. All right, next up we've got McDonald's here.
This I just want to show, here's a perfectly good company, just like we had the Costco, good company, but I don't want to be in this stock. I think that it's going to fail as it comes up into resistance, probably about 302, 303 up there. And then down the road, if you start breaking down, first it's below the 294, that'll be a more aggressive sell signal. And then if you come below the prior one, which I think is about 292, below that, boom, I think it'll run into big time trouble, you know. So again, this is what we see. Don't get hung up on names, on, you know, beautiful stories. There's a reason why, we'll find out later on, the stock hasn't made a new high in a heck of a long time, despite this bull market.
Exactly. All right, moving on, we've got PEN, Penumbra Inc.
Yeah, this was a hot stock. And now let's follow the whole sequence from, go to that black line where it made its ultimate high. At that point, you'd say, still a good stock. Then after that, look, yeah, you get a little finky action. Then when you start breaking below, you would, that prior low, you would do a little trimming. Then right there, right. Then when you break the 50-day moving average, you go, oh, I'm getting a little concerned. This is the second time, actually the third time you broke the 50-day. To use a crude analogy, it's almost like somebody having a repeat heart attack. So each thing is taking something out of the person. Then, boom, once the last time it broke the 50-day MA, it's done. And now it's broken the 200. So this is a stock you want to sell on strength. You do not want to be bargain hunting in it, that's for sure. But near term, it's oversold. It's going to have a PS rally.
Excellent. All right, next up we've got SKWD. Again, similar failure at the double top here, breaking lower and now pulling into the 200-day moving average after breaking the 50 back here.
It doesn't break that low of Wednesday, you'll probably get an oversold rally. But the main thing, I'm trying to do two things here with these charts. One, to show people how many, and like I said, I could have given you dozens of more lousy charts. How many charts are there that are ready to cause you losses if you don't really understand your discipline? That's number one. Number two, to see this isn't a normal bull market, because in normal bull markets, you may have always a couple of charts that are a problem, but you have a plethora of so many of them that are a problem in a market that's theoretically, day after day, the S&P is registering new all-time highs. You got to know that's another subtlety. That's telling us something. We're getting later in the game. It's also telling us something that most days the new highs, even on the New York Exchange, are more like 80 or so, or 80 plus. In a really healthy bull market, we should be seeing 250, 300 new highs. You're definitely getting later in the game, but hey, we're all good enough. We can play it. We won't be the last ones on the dance floor, but we do have to know it's getting later in the game.
Excellent. All right. We've got Tesla here, which has been a choppy one. Recently had earnings gap down, try to push higher into the 200-day moving average right here. How are you looking at this one, Stan?
I purposely put it not because it was a screaming chart like some of the others, but so many people care about it, and I get asked about it so often by clients. So first, I don't like it. Look at three lower peaks. 1, 2, you'll show it to them. 1, 2, 3. There's 1, 2, 3. So already I don't like that. Number two, you see that the 50-day moving average is starting to round over. I don't like that. Number three, you see that it's edged below its 200-day MA. And now what we have to watch for, which would really put the kibosh on this, in the next couple of weeks, if the 50-day breaks below the 200, which would probably be 2-3 weeks from now, even if it's going to be bad, that would be really negative. And then, in addition to that, if you start closing cleanly below 300, which is near that low of Thursday, and the market, always looks at round numbers, I think this stock could start to get itself into trouble. And even if it doesn't, why would I want to consider buying it when we have so many A ideas and this is a D? So I felt that this was important for us to look at. It shows us a lot of things, and it also tells us something to watch in the days ahead.
Excellent, Stan. This has been great. There are a lot of names similar. Let me bring up Palantir that have just been running for a while. Again, We're getting maybe a little bit later in the intermediate move. We'll see how it plays out. If you have this and you're more of a longer term trader, like to hold for a few months, how would you personally be looking to both try to capture any remaining trend, but also protect yourself if it does ultimately roll over and form another base?
Fine. Well, first of all, I'd enjoy what I've got, and I would put a trading stop for part of the position, and there's no magic level. I'm more aggressive, so I would probably put it 1/3 to 1/2, but some people may only do it for 20%. But under that low of 4 days ago, if you close below that, I would definitely start to take some chips off the table. I don't care what happens. That would be the first sign, like we have to make a move. Then if thereafter, which it hasn't done for months, if you at some point, Rich, maybe it's a month from now or 2 months from now, you close below the 50-day moving average and the moving average is flattening at that point, I get the hell out of the position. But we're looking so far down the road. At this point, it's good. You stay with it and you wait to even get the first little negative signal before you do any selling.
Excellent. Stan, were there any other charts that you wanted to go over, or is that pretty much it? I've got a few other questions.
I think we've covered the waterfront quite well.
Awesome. There was a really interesting question that we got from an audience member about any advice you have about protecting your health and taking care of yourself so you're in the right headspace and physical, health-wise, so you're able to trade for decades and have that longevity. Any thoughts there that you might share with people?
Yeah, again, I don't want to come across as some kind of expert. I just know what I do for myself. Number one, I've read it, I take a lot of supplements. Number two, I try to work out. I can no longer do aggressive jogging. At my tender age of 83, my knee barks up, now and then. But I work out on the treadmill. I walk with my knee well padded. And I think if you do some exercise, you also take some supplements. And once in a while, you do a little meditating and you just get away from the firing line because it is so crucial. And you get whatever works for you. You get out, you play a little tennis. I've never played golf. Some people are golfers. You just get a little diversion. I think that's the best you can do in this world.
And you might have mentioned it there briefly, but how important is it once you've done your homework, you've done your work for the day, you're ready for the next day, to get out, go for a walk with your significant other, get away from the screens a little bit? Is that pretty important as well to de-stress?
I think for sure. I think for sure. So much of it comes down to common sense, both in life and health and in the market. Common sense goes a long ways, and we just have to, again, have good discipline when we're playing the market. And we should also have, I'm not going to tell you I'm perfect at this, but I have pretty good discipline at, taking care of myself. So we try to have discipline for our health, and you do the best you can. I think life and the market is similar. They're probability games, no guarantees, but in each case, you just try to put the best probabilities forward that you can, and then whatever is. Excellent.
Well, Stan, this has been great. For those people who want to learn more from you and connect with you more, you obviously are working hard every day and every week on Global Trend Alert. I look forward every weekend to reading your thoughts. It helps both confirm what I'm seeing, and then I always have something new that I catch reading there. And it's great that we're offering it through TraderLion to subscribe to Global Trend Alert. Anything you want to add about Global Trend Alert, what your goals are with that, and what you hope to pass on to clients?
No, I just think that hopefully, I think that it's my legacy. I'm not bragging. Maybe I'm bragging a little. I can't tell you how many letters I've gotten over the years where people have said, hey, you've changed my life and thank you. To me, that's really great. And I think that's my ultimate legacy. But hopefully the legacy goes on for a long more time.
Excellent. Well, Stan, this as always has been great. Obviously, stage analysis is at the core of how I trade. It was one of the first concepts that I learned for trading, actually, by Dr. Eric Wish when I first got started. Any last words of advice for traders out there, either about stage analysis or trading in general?
No, I just think what we said before, stop making the game so hard, stop overthinking, just be disciplined. look for good charts, look for the little subtleties the charts are telling you. Don't listen to what your neighbor is saying or this and that. It's okay if your neighbor gives you a tip and you go look at the chart and you go, are you kidding me? Or if you take a look and you go, oh, he's on to something. But really, at the end of the day, I always come back to that one word, discipline. If you're really disciplined and you try to keep your emotions in tow, I think the game becomes a whole lot easier and more profitable. So that's the best we can do.
Excellent, Stan. Thank you as always. To everybody watching, I hope you guys enjoyed. Check out Global Trend Alert. The link is in the description below. And stay tuned. We'll be right back with the next presenter. Cheers.